Hey all, welcome to ShareTreck. This is Raj here, friends. Today I'm looking at the CNBC. As always, the homepage shows me that all the indices are positive, but I believe that this is basically a dead cat bounce, and I'll explain the reasons why. I'm not a perma bear, but I want to be very cautious at this point of time, and there are lots of reasons why one has to be cautious, and I'm going to explain all of that in today's video. Of course, all of these are my personal opinion. I'm a retail investor just like yourself. So I may be wrong many times. So always do your own due diligence. Talk to your financial advisor before taking any major financial decisions like investing in a stock or using some tip that I give you out here. Now, having got that out of the way, let me share the reasons why I'm not as optimistic that this bounce is going to last. So the first thing is that we have tariffs starting anytime now on Mexico and Canada. It's on. Unless Trump decides in the last minute to cancel or postpone it further, I think that negative bearish aspect is going to definitely be there. The other thing that I don't believe is Treasury Secretary Scott Bessent saying that tariffs won't cause inflation to increase. I don't think there is any scientific or economic basis for making that kind of a statement. Tariffs are always taxes paid by the importer and passed on to the ultimate consumer. And just like we saw during COVID, when there's an opportunity to blame some other factor for inflation, there is always profit taking that happens. So expect costs to go up. So I do not believe what Bessent is saying. So that's another one. You also see the headline, Treasury yields edge higher as tariff deadline nears, which is bound to happen because there is always a flight to safety when there is geopolitical risks. Tariff, we are not talking about just Canada and Mexico. When Canada and Mexico tariffs get implemented, they are the cutting edge of the sword. They are the early moves. After that, there is the 10% on China and reciprocal tariffs worldwide. And Europe is already working on a free trade agreement with India. They are putting it on a fast track and expecting to sign it by the end of this year. And they are making appropriate moves to court other countries so that they can expand their markets and reduce their reliance on the United States. So treasury yields are bound to increase and money is going to go in there. The other macro aspect that really bothers me is Trump announcing strategic crypto reserve, including Bitcoin, Solana, XRP, and more. I'm thinking this is totally gratuitous. There is no need for the United States to put money into strategic crypto reserve. It does not reduce inflation. It does not improve healthcare. It does not improve jobs. It does nothing for the United States economy. So why is this happening, and what message does it send? This could be an absolutely stupid move in my opinion, but the message that it sends is that the US dollar doesn't have self-confidence, and in order to take care of itself, it has to depend on crypto, and therefore they are creating crypto reserves to preserve value. Now, this is going to be a bull case for crypto coins like Bitcoin and Ethereum, but I don't think this is a good move. And again, with everything that this administration does, we may have a retraction of this policy maybe a week or 2 weeks down the line. So when we have these kind of moving targets and fluid policy, I don't see that as a firm base on which a market can start growing. So that's the other aspect. Now, you also have Warren Buffett saying the same thing. Warren Buffett calls Trump's tariffs a tax on goods and says the tooth fairy doesn't pay them. So he restricted himself to only those comments, and he said he doesn't want to get political. So we have that out there. And then I want to show you some other things also out here, some other news items. Eurozone inflation dips to 2.4% in February as ECB point to sixth rate cut. And then we have Europe doubles down on Ukraine peacemaking pledge after White House fiasco. So basically the White House fiasco is lining up United States with Russia and North Korea. Now that's a very small market, and you can't grow your market as much because those are the only countries about which Trump has not said them being unfair to United States or anything or taking advantage of. So he's pro those countries and he's anti the other countries. So the whole premise for the US stock market is getting a bit shaken up because the supply chains have been built with the countries that Trump thinks are not friendly and are taking advantage of. The global markets of the Mag 7 and others are in the countries which Trump considers unfriendly and whom he's going to tariff. So there you have it, right? So those are the kind of things. The other headlines are Trump's diplomatic conflict and economic assault. These kind of headlines are not something that we want to see to underpin a strong stock market. So those are all the reasons why I think that I'm not very, very comfortable that the market is going to go up. Now, there are other things also I have here which I want to briefly touch upon before I go into our technical analysis. There is, what else do we have here? Okay, I'll get back to that earlier. I was going to talk about self-driving technology, but I'll find a segue for that later on. So all the futures are looking positive, but I am thinking that 2 or 3 hours into the market, we'll be seeing a change. We are going to look at ISM manufacturing PMI and ISM services PMI, two important data points this week. And then the most important of all is going to come on Friday when we have the non-farm payrolls and unemployment rate coming up. And then Fed Chair Powell will have to speak. So those are the other important points. And I'm thinking that increasingly, the Fed is losing the ability to control the narrative. They are more or less become paralysis by analysis because they don't know what to expect from the administration. Typically, in a healthy economy and a political system, you need the financial policy and the monetary policy to go hand in hand. Even though they may not talk to each other directly, they are reading the same economic data and having the same economic ideology and fundamental theories based on which they make their decisions. But right now we have the fiscal side of it and the government policy side of it going and marching on their own tunes, and the Fed is left just watching what is happening out there and looking at their dual mandate of controlling the inflation and maintaining the employment levels. And they're scratching their heads wondering what to do, because the policies that are coming from the White House are basically inflationary, and at the same time they are reducing jobs, which is deflationary. So what is the Fed supposed to do? If the Fed increases the interest rates, then it can tamp down on inflation, or at least have a hope of tamping down on a policy-based inflation. But the side effect is going to be more job losses and then into recession. And if they decide to cut the interest rate, then the inflation will go out of control. So either way, whatever they do, at the end of the day, White House will blame the Fed for having screwed up the economy. So it's a no-win game for everybody. So basically, unless we have some change in the White House, I think this market is going to be destined to go down. Of course, I'm not an expert on US politics. I'm a Canadian. I don't know anything about that. Maybe I'm a little biased because Canada is on the spotlight of all these tariffs. So you can take it with a pinch of salt and you can put your own comments out here to educate me about it. Now, let's look at the NASDAQ futures. They are looking positive. They are up 0.73%, which is a very, very healthy pre-market jump. So I'm feeling optimistic about NASDAQ out here. But at the same time, there are some technical factors that we have to reconcile. Momentum is below average, even though it's picking up. The picking up part is positive. Below average is not very reassuring. Whenever momentum is below average, I don't believe the trend will go in the direction that it is going presently. It could be volatile. Second thing is that the MACD is bearish. Of course, it's moving towards the signal line, but the fact remains that it is still bearish. The pre-market indicates that we are going to come out of both of these situations, and I would like to see what happens when the market opens, mainly because we have a very strong resistance. We have this diagonal line of resistance from a previous bull channel, which is yeah, hold on guys, Perimand. Yeah, hold on for a few minutes. Once I finish this analysis, I'll take up that symbol and we'll do a quick technical analysis. And let's go ahead. Now, we're looking at this diagonal line of resistance, which is coming from a long time. So that's one of the reasons that we might have to be careful. The second aspect is I have introduced a WWAP out here. That is showing that we still have another resistance out here, which we have to break through, and that's in confluence with the diagonal line of resistance that has been coming with us from a previous bull channel. So both of these are going to be a bit formidable. So that's the main problem out here for NASDAQ, which it has to overcome today. Is it impossible to do that? I don't think so. It's quite possible. It all depends on what news we get when the market opens. But I'll be cautious. I won't jump into the market in the first 2 or 3 hours. If I have any shorts, I would like to cash in on those shorts at this point of time. And then if I look at ES11, sorry, if I had any longs, I would like to cash in on this time because the profits might disappear. Then we go on to S&P 500 E-futures, and we are looking at a gain of around 0.49. Again, this is a very healthy gain in pre-markets, and typically these kind of gains have led to gains when the market opens. But again, I have the same issues out here. We have a diagonal line of resistance from a previous wedge. We have to overcome that. Of course, we have got a good support out here at 5,971. So to that extent, S&P 500 looks slightly better. But again, if I look at the WVAP profiles out here, anchored VWAP, we have got a resistance out here, which has to be overcome. Now, let me take away the anchored VWAPs and maybe let's look at what we have out here in terms of the 200-day exponential moving average. The 200-day exponential moving average still shows that we are in a bullish zone. But if you look at the 21-day exponential moving average, that is also coinciding with the diagonal line of resistance from a previous wedge. And those two become a formidable resistance. So either in the first 3 or 4 hours, we have a turnaround, or maybe tomorrow. It depends on how the market events go up. But as I explained, fundamental and geopolitical issues are not supporting us. And if you look at the 10-year treasury yield, they are raising, and when the 10-year treasury yield raises, we typically find that the stock market goes down. So that's what I am thinking out here. Now let's go on and have a look at genomics very quickly. We are looking at, before that, let me go to the indicators and look at where we ended Dow Jones. And we still have the gap fill out here for the Dow Jones to fill up. And when it comes to S&P 500, we have done the gap fill already. We got a support out here at 5,841. And as we saw, futures are showing that we are much higher in the pre-market trades, and we still have this diagonal line of resistance, which we need to cover. Russell index, is up 0.89%, and it has crossed this line of resistance that we had at 214. So I'm going to mark that as a support. So Russell index is looking better, but it still has the 200-day exponential moving average that it has to break out through. And when we look at the Nasdaq, of course, we are going to be having a bounce as we see in the morning out here, but we still have a resistance out here at 20,923. And everything I spoke about in the Nasdaq futures still apply. And PCC is more or less neutral. Put call ratio is neutral, and VIX is going down 0.51%, but we still have a strong support out here at 18.16. So that's the story out there. And looking at gold, gold is starting to pick up a little bit, and it's got the 21-day exponential kind of preventing it. I'm thinking that gold has got to bounce back from the support at 2792. So it's likely to consolidate, come down, hit this, and then move towards the 3,000 target that it has got. So it's going to retest the support out here before moving up. That's my my analysis, basically, because MACD is still very bearish. Momentum is above average, but overall the geopolitical situation is going to be bullish for gold. But technically, I think that it's got to test this support before creating new highs. So that's where I would leave that. And overall market breadth had improved on Friday, and I think it's improving again today. So that's again another positive for us. Let's go on to genomics. In genomics, I think Verve is up 1.11%. It has got a support out here, this diagonal line of support. So that's going to help us today. And this could probably become a trend reversal pattern out here. Some kind of trend reversal is evident out here. MACD is on the mend, but the fact that we are below average on the momentum scale is preventing me from being overly optimistic. We'll see as it goes in the next 2 or 3 days. We'll get much more data. Ginkgo Bioworks is up 3.88%, and I think that looking at the MACD and momentum, I would say that it may probably consolidate or come down a little bit, but I don't see any resounding technical support out here unless there is some very positive news. And we just had the earnings that has not helped to move the stock up again. And then we have Caribou Biosciences, which is flat on pre-market trades, very bearish still on the charts. And CRISPR Therapeutics is up smartly 2.55%, again looking very bearish on the charts. It still has got great support out here at 44.58. I don't think I have anything more to add out there. Grail is up 3.73%, managed to get above the 21-day exponential, but overall the chart is still weak. Prime is down 0.40%, still in the bear channel. So I think the chart is still looking weak, so nothing much more out there. Beam Therapeutics is down 2.84 as of Friday, and it's up 2.13% today, kind of cancelling out all the loss that it had before in the pre-market action. I would still wait to reserve my thoughts on this, because I don't think it's a resounding bullish upturn, because we are still below the 21-day exponential and the 200-day exponential, and we have a very bearish MACD, and the momentum is also below average and not moving in the right direction. Altimmune was up 3.58% on Friday, and it's up 0.30% today, and it's above the 21-day exponential, and it's still below the 200-day. So it's kind of done a trend reversal out here, I believe, and the MACD is bullish, and momentum is also improving. So I would expect Altimmune to pick up a little bit. I thought that the earnings were pretty good, and there was a few catalysts out there. Maybe the market is starting to recognize that, and I'm expecting Altimmune to improve further today. Bluebird Bio is up 7.37% as of Friday, and again another 0.49% today. My original thought was that the private equity takeover had priced it at $3 per share, so I was expecting it to go down to $3, but that's not happening. So probably a part of the $6 premium is being added onto this. That's my thought process at this point of time. However, if you look at MACD and momentum, they do not resoundingly support an upward move. Of course, there is this gap fill that needs to be done, but I don't think the fundamentals are supporting a gap fill out here. That said, Allogene is down 3.08%, very weak on the charts. mRNA is up 0.81% in pre-market trades, still very weak in the charts. ARCG is up 1.83% in pre-market trades, again very weak on the charts. We still have support from this diagonal line of support. So that's the only positive I can see out here. PSEV is up 2.07%, and it's still looking weak on the charts. Both MACD and momentum are weak. Intelia is up 0.40%. Below the 21-day exponential, the chart is looking weak, so I don't think there is any underpinning for that pre-market enthusiasm. Illumina is up 1.01%. I think Illumina is looking very attractive, and I can't rule out further downsides for Illumina as the tariff war heats up. It's the China factor again at play here. And I think that this is like a coiled spring. It will be worth doing a dollar cost averaging, because the moment the tariff issues are resolved, I think that it's going to jump up like crazy. So I would start nibbling on Illumina. Again, personal opinion, not financial advice. This could give a really good gain out here. Let me just take a wedge and mark from now onwards until where I think it could go. If it jumps up, that's a 38.62% gain, which takes it all the way to $34.23 gain. And that's phenomenal in my opinion. And of course, there's a lot of risk attached to it. So as I said, it's my personal opinion. I would prefer a gamble out there. IMTX is down 0.46%. Chart is looking very weak. Probably due for a dead cat bounce. It got a dead cat bounce. Maybe it will come down again and bounce a little bit, but it's in a bear channel. Editas is up 2.08%, and it has got the earnings coming up on the 5th of March. That is going to be 2 days from now. And if the earnings happens on that day, and if we get any catalyst, probably this could be justified. The way I look at it, it's a bull flag at that point of time, and it has a tendency to break upwards, and it's above the 200-day exponential. And I think we'll have to wait for the earnings before we decide any further. Iowa is down 1.53%. Chart is looking totally weak. There's a gap down which needs to be filled up, but I think a dead cat bounce is also in order. So I'm surprised with this huge negative out here. Then you have Unicure, which is up 0.08%. It's still below the 21-day exponential moving average. And MACD is trying to become positive. So maybe today's action might push it to the edge and take us above average. We'll see when the market opens. We have had earnings coming in, and there's been a disappointment with the earnings. So the earnings are also going to weigh down. But in the last 3 days of action, we have seen the earnings have been absorbed by the market. So the chances of Unicure improving are much higher than it deteriorating further. Vertex is up 0.27%, and it's still on this bull channel. So I'm pretty convinced that it's going to continue the way. A little bit of consolidation, a moderation, and staying above the bull channel is in order. And then let's go on to AI. We are looking at NVIDIA. And when it comes to NVIDIA is down 0.74%. I'm thinking that NVIDIA is definitely something that can be dollar cost averaged at this point of time. The future story is still intact. And we have this a bit of a divergence out here. I think even though the RSI is also looking bearish, and the price action is also looking bearish, I think the price action is a bit overdone. So a little bit of consolidation is expected. So when the market opens, I think that somewhere during the middle of the day, we'll start picking up when the other stocks start going down. The sad part of NVIDIA is that it's still below the 21-day exponential moving average, and we have 3 of these resistances above it. But I am thinking that the fundamental story of NVIDIA is still intact, and it has got to improve. I think that's likely to happen in the near term. And then I'm looking at SMH, which is the semiconductor ETF, and that's showing a gain of 0.85%. And if NVIDIA is not going to pick up, I think SMH also has got to go down. So there is a little bit of a contradiction here in the pre-market action. So I'm thinking that I'll go with the contradiction that I see here with SMH, because I'm thinking NVIDIA is bound to improve during the day. Now, the key stocks that we have to talk about is SMCI. SMCI has shown a jump in the pre-market action, and SMCI is looking at breaking through this 21-day and the 200-day exponential moving average. So I'm thinking that SMCI should get a little bit of love today from the market. The MACD is absolutely bearish, and the momentum is below average. But the pre-market action out here makes me feel that it might improve the RSI, and if the RSI improves, that has the potential to mend the MACD, but it's a far shot. We still have a resistance out here at 42.80. We are below it. I'm just going to mark this red. So unless and until we break through that, I think that is a bearish case for SMCI. Then we will go into Qualcomm, which is up 0.95%, still not able to break this diagonal line of resistance. Chart is still looking very weak. Google is up 0.75%. And Google is within this area of demand that we have out here, and the 200-day exponential moving average is continuing to provide a resistance, and MACD is still bearish but trying to mend. Momentum had a dead cat bounce in my opinion, and are we going to go up further? I don't think so, at least in the first 2 or 3 hours of the day. There is always this possibility that we may go down. If you recollect my previous commentary, everything else is like a dog's breakfast. On top of that foundation, how can a market go up overall? Unless there is something very fundamentally strong. So we are not yet into the stock pickers situation where the market starts falling and individual pockets of excellence emerge. I think that's the time when Google, Nvidia, Microsoft, these companies will surface as better stocks. And right now the PEs are getting improved. That's another positive. Meta is up 0.63%. It's on this diagonal line of support. It's a long-term support. MACD is mending. Momentum is still below average. And again, we are still not in a stock pickers kind of a situation. The overall market has got some kind of bullishness in the pre-market, which is not justified by the geopolitics. So that's where I'll leave it. And then we go on to Microsoft. Microsoft is up 0.53%, 0.43% in pre-market trading. MACD is mending. Momentum is also picking up. We have a really good support out here at 386.90. So the next resistance for us for Microsoft happens to be at 399.89. After that, the next resistance is at 404.55. I'm looking at the next resistance is something that we are likely to try to conquer today at 399.89. Now, the next thing I want to do out here is to look at the next big one, which is Palantir, the other overvalued stock, which is again gaining 3.06%. The gap fill has already been completed, and we have got the foundation here at the support of 83.68. But the MACD is still very bearish. Momentum is also below average. And again, the cuts that the Doge is doing is going to be all across the board. And that is the main problem that we have with the market. Now, I'm a contrarian in this place. I feel that Palantir is overvalued, but I think that Palantir could be justified to have a little bit of a gain, mainly because if you're going to cut defense budget, you might probably cut it on the F-35 end and the tanks end, which are all the traditional warfare. You would increase it on the cyber area, but the Trump administration has cut cyber aggressive activities against the Russians, which could have been a good chunk of the bucket of cyber defense. So I would expect that in a modern warfare kind of situation, you'd put a lot of money on the cyber offensive, getting into power grids and other areas, and being ready to do an offensive. So that's where the money will go. That's where Palantir will excel. The other part of the money will go into drones and AI systems and physical AI like robotics and intelligent drone configurations and stuff like that. So I would think that Palantir would gain out there, but I don't know what's going to happen. So I'm not going to touch Palantir at this point of time because I'm not personally convinced. Then we go on to look at Adobe. Adobe is gaining 0.37%. I have a cup and handle target out there for 478.68. I'm still not giving up on that because we have a mild bull channel out here, which I'm tracking, and we are still on top of that. So I would say that I'll leave this here. The moment we fall below this, I would say that I'm going to abandon this cup and handle target. And then let's go on to look at ARM, which is a foundational architecture, which is still in play. It's up 1.19%. Still below the 200-day and the 21-day exponential. MACD is improving. Momentum is also picking up. And if Nvidia is going to be a good pick, I think in the future ARM should also be a good pick, and so should be ASML and TSMC. And I'm also looking very closely at SMCI because they are opening up a new factory and they are going to invest more money out there and they're optimistic. So I'm thinking that these are some of the stocks that will definitely stand out if the market starts falling all around. So with that said, I just want to quickly look at Rigetti, which is up 3.19%, but still MACD and momentum need to improve. And then we have SMR, the nuclear stock, the nuclear play that we have out here, which is up 4.19% in pre-market trades, but trying to get into this bullish channel from the past. And we don't know if it's going to happen because both momentum and MACD do not seem to indicate that that's the way we are going. And we have earnings which are due today after hours. So I'll watch that and see if there is any catalyst that can take us above the 21-day exponential. And if that happens, I would be really happy. And then we go on to AV, which is another area which I think should benefit in modern warfare. But it's up 1.92% in pre-market, but the fundamentals are looking weak, but they are improving. So hopefully this happens to be the bottom and we move up further. And we have got the earnings coming up tomorrow after hours. If there's any catalyst in the earnings, those are the things that I'm depending on at this point of time. So with that said, I just want to go on and talk about what one of our viewers has asked us about RXRX. So I haven't heard about the stock before, so I'm going to look at it right now. RXRX. Recursion Pharmaceuticals, RXRX. Have I got the symbol right? Yes. So let's take this up and I'm going to get into RXRX. Let us look at the earnings out here first. So the earnings, negative surprise on both EPS as well as earnings. Let us take a quick dive into RXRX. Does it have any therapies? Let me quickly go in here. Going to Google RXRX. Recursion Pharmaceuticals. Pipeline. Medicines. Okay, so they do not have any therapy that is monetized. They have got oncology in phase 1/2 of clinical trials and cerebro-cavernous malformation in advanced phase 1/2, and they have another therapy, 1, 2, 3, 4 therapies in mid phase 1/2 and 1 in advanced. They got a whole lot going on out here. Okay, then the other thing we need to look at is, okay, I'll do a video on this, Parimed. I'll do a video on this because I want to look at the cash runway. I want to look at how much funding they have and is there a potential for equity dilution. We'll have to look at that a little bit. But suffice to say that at this point of time, I think that they have no monetized therapies. So with that said, I think what's going to happen with these kind of companies is that estimating a revenue for them is very difficult, because I don't think they themselves know what kind of money they're going to get when, because those will be milestone payments if they have got collaboration. And then if you are looking at EPS, I don't think the EPS means that much. It could be some kind of a variation here and there because they invest on these clinical trials and they do not have any monetized income revenue coming in and expenses on those products. So it's very difficult to create a model that can reliably show earnings. So I think the analyst estimates themselves are variable. That's what I say for most of the startup genomics companies that we are tracking. So I wouldn't place too much of weight on what we see here. I think what would be more important would be to see cash runway and the data that has come out of all these clinical trials that they have there, which kind of gives us an indication whether they are still looking viable or not. And if they are viable, then we have to get some more data from the genomic companies that indicates when they are going to do the BLA application. And that's where most of the genomic companies fall short. We don't have that much of a transparency. But now let us do some technical analysis out here. So on a short-term time frame, if I look at today's time frame, it seems that this particular candle indicates that there has been a lot of gains. Let us look at the date of the earnings. The earnings happened on the 28th of February, and this candle is for 28th of February. So obviously the market liked what they saw. Things were not as bad as they expected. So there has been a bounce that has come up, but it has not yet mended the MACD and the momentum. So I'm thinking that the pre-market action today is indicating that yes, we are going to see a little bit of jump out here. So we see that this orange line out here, it indicates the price. It's gone above the 21-day exponential. So it's gone above the 200-day exponential moving average, which I think is a positive. Now I want to go out to a wider time frame. Let us look at a 1 month time frame and recalibrate the chart and look at where we are. So this is a kind of a bear flag that I see here. If I look at it in one way, it's a bear flag. The other way to look at it would be to try to see if they can see any head and shoulder patterns or anything like that. So we have these two bottoms out here, and we have got these two bottoms out here. So if we consider this to be a head and these two to be shoulders, then you have a reverse head and shoulder. That's a very tortured one. And also we don't have enough sample out here to base this upon. So I'm not very confident that I see any major bullish signs. But if I also draw a long-term trend line, so I can definitely see a bullish trend line out here. Let me just pull this across. So this is a bullish trend line that I see out here. This can probably support the stock. So I'm thinking that in the near term, let us say the next 1 or 2 months, there is going to be an overall gain in the stock. But again, it depends on where you enter the stock. If you enter the stock right now, I don't think you're going to see any of those gains. The chances of you seeing any of those gains is very, very minimal, because even if it continues going up on this, it's not going to go up on a straight line. It's going to go up a little bit and then come down, go a little bit up, and so on and so forth. So on an average, it's going to improve. So the best strategy is that if you want to stay invested in this stock, my personal opinion, of course not financial advice, would be to zoom out to a 1 month chart. And when the stock price comes closer to this diagonal line of support out here, that's when you want to enter, but you want to wait and see that it bounces off, and then you buy, so that you have a good chance of staying positive in the next few months. But if you buy anywhere above that, I think you're going to always see the stock in the negative. And that's what I have learned from all my genomic investments, that we may buy somewhere, but unless we look at the long term and see where we are buying it, the chances of us staying negative for a very long period is very, very high. But if you were to buy somewhere, I think, let me put a number to it. Let me just take a line from here. Let's say I'll take a horizontal trend line, and I would say that the ideal point that I would buy this on would be around 6.81. If that's the price I get for this stock, I would definitely buy a small amount and wait to see how it goes. And that small amount is likely to be to stay positive for a reasonable period of time while you wait for the share price to improve. So, and I'm basing that on the fact that this diagonal line is increasing. So future candles will have to have a wick that either penetrates this line or a body that stays above this line. So that's the way I'm looking at it. So if you like this, please put a like out there and let me know that this helped you a little bit. And is there any other stock that you guys want me to have a look at? I will just check it out for you. Or else I would like to wind up the live stream and go to do my pre-market trades and see whether I can sell off my longs that I have got and battle down the hatches and wait for the market to go down. Okay guys, thanks for joining. I'll catch up with you again in the next live stream.